Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month lead and tin. LME 3-month lead. I've recently been away speaking at conferences and seminars on technical analysis, so it is good to come back and actually do some proper technical analysis on metals today for a fresh set of eyes. For some of the metals, looks like I haven't really missed much. So in LME 3-month lead, in mid-September the market started to move lower that eventually led to a September to October based bear channel on my daily chart. However, the low point of the move down in mid-October, at the January 2020 high at 2039, prices turned back up again with a combined daily key reversal up and bullish engulfing pattern. 8 weeks ago, I said, and I quote, "Only if we see the market stabilize at this January 2020 high at 2039 as it did back in early July, only then can we see prices possibly using this bear channel to move or even vault into the next pattern." End of quote. Prices did indeed stabilize there and rode back up again to test and punch through and close over amongst many resistances. The flatlining long moving average currently at 21.28, the 50% Fibonacci line, the March 2020 to March 22 move at 21.35, the medium moving average currently 21.55, and the short medium moving average currently at 21.35. Now the move higher reached its zenith at the same high we saw in August, just over 2300, reaching and passing through the primary target at 2185 and the secondary target 2270 for the break above the bull channel, before turning around and dropping even faster back to new lows not seen since June, and in the process leaving behind a V-top formed over mid-November to complement the earlier V-bottom with an extension that we saw in mid-October. So what now? Well, we have some mild congestion from October in the 2090 area, but we really don't have that much resistance above until we start approaching the moving averages. Obviously the flatlining long moving average first, currently at 21.28, as well as the interesting 50% Fibonacci line of the March 2020 to March 2022 move at 21.35. LME 3-month tin. The action from late July until the start of October, for quite a while during its construction, looked like it might be the second leg of a bearish half hesitation, but prices ran into two significant supports that stopped the decline. The first support was, still is, and it also is an obvious one, is a series of congestion bands seen below, specifically between 23,850 to 24,155, and then between 22,895 to 23,555. I've spoken about these numerous times before, so they should be familiar. These supported the market in early October, then the turn of October into November, and most recently, despite some severe bearish pressure in late November. The second support was, and still also is, a newer, less obvious one, but one that still supported the market, though it did so by declining each day. And that is the neckline, which is highlighted in bright red on my daily chart, currently at 22,555, so 22,555, of the June to October head and shoulders pattern. It is by no means a great looking pattern, with the second shoulder having quite an extension on it, but it has been good at defining the lower end of the recent market. Plus there is an additional consideration to take into account. If we look at the highs since September as a downtrend currently at 25,000, which is highlighted in bright green on my daily chart, then the action since the late summertime, with the help of this downtrend and the neckline together, becomes a bear channel, currently 22,555 to 25,000 even. The very recent action has seen the market emerge back up from the congestion bands below and over the last few days hesitate around the dark green declining short medium moving average, currently at 24,580, before contemplating an attempt higher at the upper bear channel line, which is done today, plus the 50% Fibonacci line of the October 2022 to February 2023 move at 25,020. We could actually look at the last 3 weeks' action as a small bull channel, or even a leg up and hesitation in a small bull flag, potential up to the 26,300 area. But there are some further significant resistances above. Notably, the 2013 high at 25,250, the 2012 high at 25,875, and the two declining moving averages, the medium moving average currently at 25,375 and the long moving average currently 25,595. These two have just come away from forming a dead cross last week, a lagging indicator. I will read nothing more into that. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.